G'day folks, welcome back to another update for natural gas and its ETFs. Now we've had a bit of a bounce after our bearish divergence we projected last update, and it's bounced off a minor support on a diagonal, so let's go into that in a minute. Before we go any further, make sure you hit that like and subscribe button to support the channel. In terms of the outlook as of today, February 26th, the natural gas market outlook, prices have experienced significant volatility due to extreme weather in the US, with ETFs like BOIL and UNG seeing substantial gains. Global demand for liquefied natural gas is projected to rise by 60% by 2040, driven by economic growth in Asia and decarbonisation efforts. However, supply constraints and geopolitical tensions pose challenges to meeting this demand. In terms of demand for AI data centres, rapid expansion of data centres is significantly increasing energy consumption. Goldman Sachs research estimates that data centre power demand will grow by 160% by 2030. This surge is expected to boost natural gas demand by up to 8.5 billion cubic feet per day in the latter half of the decade. Major tech companies are investing heavily in new data centres, potentially leading to high natural gas consumption and raising concerns about costs and climate targets. So as always, look at the long-term effects first. So let's look at the natural gas commodity price. So on the monthly, we've got the price and the moving average of the CCI broken above their moving averages, and those moving averages, for those new to the channel, are available in the description below if you want to learn how to draw those on your own charts. But basically it's a bullish move when both the price and the CCI are broken above, and normally the CCI trends in the direction of the price chart. On the weekly, likewise, bullish movement on both the CCI and the price. We had a bit of a break into that moving average range recently, last a few weeks, but it's actually broken out of that again, giving us a bullish move. On the daily, that's on the weekly. On the daily, it's also a fresh breakout as well this week so far. The bullish move above the moving averages of the CCI, which is our main indicator for trend analysis. Now, we also look at the any support resistance lines, and I've got these drawn here. Looks a bit messy, but basically what it looks at is it broke down, bounced off that resistance at 43.64, and then it bounced off this minor, what was a resistance, now minor support at 39.46, and it looks like it was approaching this diagonal ascending trend line. But you'll notice the key thing here is it's actually still bullish at the moment, last couple of days of trade, so far today as well. And it's also, importantly, the CCI is broken still above that moving average range, giving us a bullish signal on the daily. Now, if you're trading on the intraday time frame, we always remember the golden rule is we trade in the direction of the higher time frame. So whether you're trading on the daily, you go in the direction of the weekly. If you're trading on the intraday, you trade in the direction of the daily. So here we've got the 1 hour chart as an example. Same applies for any other time frame you choose to trade. But here we've got the 1 hour time frame, and you can see here, back here, we had a bearish divergence, lower or double top on the CCI versus higher highs on the price. The CCI kept falling, and that also, the price then eventually fell as well. And that was a Fibonacci retrace from that high to that low, and that's at 38% level retrace. It broke just below that 38%, bounced out of there, almost came close to that resistance, and then at our previous update, we had another smaller bearish divergence, lower highs on the CCI versus higher highs on the price. It actually broke down quite strongly, and it gapped down, and that was from the weekend. Now, since then, it's actually kept falling and bounced off this, just short of this diagonal ascending trend line. And it's been there since rising since then. You see there a bit of a fluctuation above and below that very narrow moving average range. So it's a bit of a consolidation on the CCI, but it's actually broken above the moving averages of the price chart. So giving us a bullish move. Now, again, the rule is you trade in the direction of the higher time frame. So at the moment, you would have taken, if I zoom in there, you would have taken a long position when that CCI broke above. That would have been you wouldn't have taken that trade, or you might have taken that trade, but that would have been stopped out when it broke below that moving average range. And more recently, you would have taken another long trade there, and you would close it out once that CCI breaks into that moving average range. So at the moment, you're still up 3.5% gain in 15 hours of trade. So you'll be closing it out very shortly if that touches that moving average range on the 1 hour time frame. So for BOIL on the monthly, it's below its moving average range, giving us a bearish signal. There's no CCI for it on the monthly, but we'll assume that's a bearish momentum. On the weekly, however, we've had a bit of a bullish divergence here, and it's been playing out for some time now, and that's still making further upside. You can see there, you would have taken a position around about now when it broke above that previous high, and you'd still be in the trade on that one. And on the daily, again, in alignment with the weekly, you'd be taking long trades, and you would have done quite nicely on this one so far. And you would have taken a long trade on the daily if you're trading on the daily, and closing it out yesterday actually, when it broke below that moving average range on that candle there. So that would have returned a 36% gain in 12 days of trade on the daily. If we go to the intraday charts, again, at the moment, you'd be avoiding going long or short because that CCI is in that moving average range. You want to make sure this is bullish like it was back here to trade on the intraday as well. So some of these would have been nice little trades to take. So for example, that one back there, you would have taken a long entry there and closed it out when it broke into that moving average range on that candle there. That would have returned 12% gain in 12 hours of trade. So at the moment, although it's bullish on the hourly, avoid taking long trades until we see this break confidently above the daily. So just avoid, stand aside from trading anything on the boil at the moment. Now KOLD obviously is the inverse, so it's bearish on the monthly. It's below its moving average range. There's no CCI for the monthly for KOLD. On the weekly, it's been very strongly bearish for a number of months now, and it's still bearish. The CCI is still strongly below, making a small, I wouldn't say an advance, but a small move to the upside possibly in the coming weeks. So let's look out for that. On the daily, however, you can see there it's hit this, on our previous video, it's hit this support at 1979, and it's made a small bounce off that. And that's also in alignment with this bullish divergence, higher lows on the CCI versus lower lows on the price. And we drew a Fibonacci retrace at that level there. So if we took a Fibonacci back there, that's that 23-38% minimum retrace level. So we expect it, if the price keeps rising and the CCI keeps rising on the daily here, we expect it to reach this as a minimum. And it hits that range, that's minimum range, at least more than 90% of the time. So just keep an eye on that. Now, if you're trading on the intraday, again, we go in the direction of the daily. Now here at the moment, very small move to the upside on the daily. I wouldn't go long yet on the 1 hour time frame. I'd like to see this break through this moving average range to be more confident. Although if you see here, had you taken that trade there, for example, it's a bit weak. Let me just draw a measurement tool there. So you would have gone long on that candle there, and you would have been stopped out on that candle. So a 10% loss had you traded that. So again, avoid trading this until you see the price break also above the moving average, even though the CCI has done so. And again, another potential trade there. I'm just giving you examples of what to avoid, and you would have got stopped out there, or you would have actually gained a target there of 3% gain in 15 hours of trade. So minimal gaining or trades, again, because of this very weak bullish move at the moment. Again, I'd like to see this break into that moving average range on the daily to be more confident, giving us more bullish signals on KOLD if you're going long on KOLD. And lastly, for UNG, this is broken up through a very narrow moving average range on the monthly CCI, and the price is also about to break above that possibly, so keep an eye on that. That's a very neutral to bullish move on the monthly for UNG. On the weekly, again, we've had a very long-term bullish divergence here, and that CCI is still moving higher than the moving averages on the CCI, and that price is also broken up through that moving average range, and it's also broken that previous high. So that's a nice bullish move on the weekly, and you would have taken potential long trades here on the daily. So again, another long trade would have been taken on the break of that candle, when a CCI broke above and the price broke above the moving average range, and you would have closed it out right near the top there on yesterday's trade close there at 19% gain, 11 hours of trade. So similarly, you would avoid going long or short until you see this break above the moving average range on the intraday charts. So we go to intraday charts. Again, avoid taking any trades at the moment until we see this break above on the daily. But you can see here we had a bit of a pullback, and that was because of this bearish divergence. A double top on the CCI versus higher highs on the price. We had a double top on there as well, and that was the minimum range of the 23-38% range. Had you drawn it from that high to that low, that's at 23-38% range. It gapped down, hit that range, and it's bounced out of there. So even though the price is broken above and the CCI is broken above, just wait for the daily to break above the moving average range on the CCI as well. To support the channel, hit that like and subscribe button, and for added benefits and for a cost of a coffee each month, consider subscribing to the Patreon page where we look at weekly scans of bullish shares across various regions. Thanks for watching and see you in next week's video.